All right, what is up, everybody? Hope everybody's doing well. Today, we have a case study with Husman. We interviewed him a couple months back. The video, or the title of the previous video, was zero to funded in 3 months. That was 1 month ago, by the way. And now he got his first payout. So he joined about March, it was mid of March that he joined. And currently it's mid of September. So how many months was that? 6 months.
6 months.
Yeah, so within 6 months, he went from nothing, knowing nothing, to getting his first ever payout. Now that payout wasn't $20,000. It was, it was a respectable payout, especially for a first payout and for 6 months with trading. But to be able to pull a payout by itself and to reach that point is definitely something worth respect. So we're gonna be interviewing him today, seeing kind of what happened, the ups and downs, the drawdown he went through, and then also him kind of almost crashing out and then messaging me and then me telling him, yo, everything will work out if you just follow the plan. And then a couple weeks later, he had a payout. So, Husman, if you want to kind of pick up from where we stopped last time, where you got funded, and then just with the journey from there until the payout. What happened, how you felt, what you did, and yeah.
Yeah. So yeah, it was one hell of a ride, I would say. So after I got funded, I was my first decision that I took was basically to be humble and take it slow. This is a one-time opportunity. It's We don't know if it's going to repeat itself or not, but I got one shot, and I want to make that shot count, right? So I started, and you kind of advised against it, de-risking that is, with the sizes. And yeah, I tried for a week with de-risking and being very cautious. The mental aspect of things get a lot different, especially when you are like when it's definitely when it's your first time, but also when you get funded, like you get a different set of feelings now. It's very different. It's like a mental game trading, where when you start on a demo account, it's something, right? But when you get your first eval, it's another thing completely, because you know you have put money, and now you're funded. The potential is high. The stakes are high. You can like make it or break it. So you get to a point where you are very overwhelmed with emotions of fear, of greed, of any kind, like the trading emotions in general. You get very overwhelmed, and it's very hard to contain it. And I mean, you've said it before, those who contain it, uh, those are the winning traders at the end. So uh, managing your emotions is the key to success in trading. So yeah, back to
So,
yeah. So I think I what I did basically is I took it slow. I went through an odyssey basically. I went through my own adventure. I made money. It was very little, but I was making money. And then I texted Aham saying that, hey, I'm de-risking. I'm doing this and that. He did not recommend that. I kept on doing it a little bit, but then I stopped, and then I started this losing streak. That was before I texted you the final time when I was in drawdown. So I went up to, I think, to 400, so 50K, 400 plus, and then I lost it all and just went through a cycle that got me, uh, uh, I think, $600 in drawdown, and I was very afraid.
what was the
Yeah.
reason though? Was it a losing streak only, or was it emotions outside of trading? Mention that.
Oh no, it
Like,
was emotions. The last time, so the where I actually where the slope was and where I lost most of the money, it was when I was mentally like I had problems outside of trading, outside of the trading life basically, and that kind of seeped into trading because that's what happens. Not trading, I learned that if you are suffering, if you are not psychologically good, outside of trading, just don't trade. Just save yourself. Don't trade. Take a pause.
Yeah, so it bled in, which we all know is not the right thing to do,
I
right?
remember taking two trades that are bigger than $300 in loss, right?
Yeah, so you normally risk three bills, $300.
Three 250 to three. Yeah, my basically my
Yeah,
maximum drawdown for the day is 300. That is if I cannot stop myself mentally after 250, right? I rarely reach 250 because, I like to be on the safe side and I try to not take stupid trades. So um, it is bound to happen one day. I will definitely lose 250 or 300, but uh, that day I was off the hooks. I was just taking trades willy-nilly. Especially in the second time, and that was when I saw like some texts of people winning, right? And I missed the trade. And what happened basically is that I saw each candle was calling my name saying, "Hey, I'm an entry. Just doesn't matter. Take a long, take a short, you will win. We want uh we want to get you money." That's how I felt. Like I felt that candles were talking to me. And yeah, I just
yeah.
entered a
So
lot of trades. Go on.
yeah, so by letting other factors outside of trading bleed into trading, it affected you and got you into drawdown. And then how you got out of it was you let it, you stopped letting it bleed in, right?
For sure, for sure.
So you disconnected, and so you got back out of drawdown. Did you de-risk when you were in drawdown or no?
So I tried, like I wanted to de-risk. I talked to you. You kind of recommended against it. And I actually did take one trade after you recommended with de-risk. So I took one trade just to kind of, I wouldn't call it get it out of my system, but I mean I'm more confident in your recommendation than in what I would kind of recommend on the fly. But I was like, it doesn't hurt if I try. I tried it. Now we're done with that. I cannot easily remember whether I took the
Was
trade.
it when a winner or was a loser?
I don't
Do you
remember
remember?
actually. No, I don't remember.
Yeah.
But I don't think it matters at that point because at that point I kind of restabilized mentally, like psychologically. I went back into my element and I was mentally strong, so I don't think that mattered. But after that day immediately I did take your advice. I started doing 25 sorry 250, sorry. I started doing 250 risk and basically to risk to reward ratio. So I would do 250 and I would take 500 basically, just because I'm dealing with Apex and you know how Apex
Yeah, that's a
matter. Yeah, yeah, that's another
that's a
topic.
different thing.
Mm-hmm.
But the whole point is when you go into drawdown, if you kept de-risking because you were in drawdown, the bad thing that would happen is, let's say you hopped on a winning streak, and because you're de-risked, so your profits are less. And so when you go back up to the normal risk, let's say you lose when you get back up to the normal risk, and now we're going to cut out all your profit because you were de-risked already. That's why I told you to not de-risk, and look how it paid you well. You stuck to the um to risking normally. And so when you would win, I mean, 49,600 in drawdown isn't much of drawdown anyway. And you can get out of drawdown within one trade, and you're getting profits and plenty of profits within one trade. So it's not, I remember telling you, you're not too deep into drawdown to the point where you have to de-risk, right? Because at that point, if you de-risk and then you catch a couple winning trades, those winning trades are not going to be as big as they should, and you're going to affect the whole curve of improvement. And so I'm sure if you de-risked at that point, you wouldn't get this payout as quick as you did, and you might have lost more than you would have made because you would have maybe won a couple trades that were in the de-risk one, and then you felt confident again, and then you put your risk back up where it used to be, and then you, let's say you lost that trade, you would have lost all those profits, and then you would have maybe gone to that cycle, that mental cycle of I'm not getting out of drawdown, whatever, and you would have crashed out. That's a possibility. That's what I used to do. So that's why when you're in that kind of, yes, you crashed out. I remember telling you just take the week off, and when you come back next week, keep the same risk, take the trades that are per setup, and then just let the skew of profitability or the numbers game let it play out. And it did, and you got to the payout stage, right? But the thing that I want to ask you is, most people when they get their first funded account, the emotions, they can't take it as well. They end up blowing the account because now it's real money, right? At least for me and for most traders, the first account you get, even the second, even the third, even the fourth, it's just so hard because now it's not a demo account, right? It's not a challenge account. It's an account where you can actually make money. So now the P&L, when you're up $400, $500, $600, this is actual real money that you can withdraw. So how can you, how were you able? I was even shocked of this. Like the first account you got a payout. So how were you able to mentally and emotionally control yourself despite that one crash out? That the main reason of it was something outside of trading, and you let it bleed in to trading. But in terms of the trading itself, how were you able to not let the numbers game affect you? And since now it's a live account, it's a real account, how did you control yourself so well and be able to take a payout the first try, which even shocked me? Like I said, even the last interview, I do expect you to blow that account. And you shocked me and you didn't, right? And you got into drawdown and you still came out of drawdown and you got a payout. So my main question and the whole point of this interview is, how are you able to mentally um, control yourself on a live account for the first time as well?
Yeah.
So tell us.
So that basically, I don't think one can learn mental fortitude or mental stability easily from someone else. You have given a lot of insight and a lot of advice on how to actually have this sort of strong mentality in order for you not to basically lose, like not go into a downward spiral and lose the account. But again, it does come with practice, as you have mentioned before. What I have done is basically I employed I play poker. I know how to play poker. I know poker is not about, a lot of people say poker is gambling. Poker is not gambling. Poker is a game of probability. And I used to play video games before as well. And I knew from these two things, like I had built up skill from these two sort of games where I know for a fact that sticking to a strategy and disassociating emotionally from the outcome is the key to success, or for example in trading, the key to getting a payout. What I did was, so basically I know that, and we've talked about this a couple of days ago, I had three psychological issues. Two was when I went into drawdown, and the last one was when I before I get my first payout, right? And we talked about the psychological mistake that I have done, which was, and yeah, we talked about it a lot, which was trading outside of macro.
Yeah.
So yeah, that's one confession to make. I did take a trade outside of macro on the
Yes, you did
last,
break the rules one time.
yes, yes. And that's when my emotions got the best of me, right? Because I could not take the fact that I have, that now I am 500 or whatever away from a payout. And I wouldn't, like, I was thinking to myself, I wouldn't be able to sleep the night knowing that uh, I can make 500 now and just go to bed knowing that I will get a payout next week. It was crazy. That probably is the only time that I couldn't stop myself from taking a trade, and it's a big mistake. Yes, it was a win. It could have gone sideways very quickly, and I could have easily blown the account that day.
Yeah, so the people that don't know what you're talking about, you broke the rules once before the payout, and that was really the only time you broke the rules,
Yeah,
other than that crash out. And you did it like we're not going to take away that you got a payout. I mean, it was just a final. You made like $400 on that trade.
400, yeah, like on the
Yeah, and
high
you
end.
for you to take a payout, you were at 52.5 anyway. So it was just a small little last portion that you broke the rules with. So you can't take away the fact that you did grow the account to $52,000, and you did get it to a point where you can withdraw money. But as you can see, and as everyone watching can see, all these mistakes that he did the crash out once, and then before the payout, he traded outside macro, which for our system, we only trade inside macro, which is because it's higher probability. The two reasons and the two times he did break his rules were both based off of money. And well, the first one was outside of trading, okay, but the second one was based off of money. He thought that, oh, this is a live account, I can withdraw the amount of money that I have in this account, and then he let that sip through, and then he overtrade or he traded outside macro. So that's why we have to always like that. If by the way, this is impressive because my first account, every little dollar that I made or lost, I always tied it to the fact that this is real money. But for you, you only tied it to the last portion where I could pull this money out. So you survived the whole $2,000, the first $2,000, and at the very very final part, you were like, oh, I can pull this money out, which is still good. Like emotionally, as a first account, it's still fine that you were able to control yourself that much, and then only towards the end you kind of were like, oh shit, I can withdraw this money, and you let it sip in. But and I told this to you as soon as you did it and you told me about it. This time you got away with it, but for next times this will hurt you way more than it will pay you, for sure. I mean, ask me, I know all about this. So um this time you got away with it, but doing it any other time, it will most likely blow the account, because what happens is you go into this downward spiral of, I took this trade outside macro. If you lost, you'll be like, oh shit, I shouldn't have taken it anyway. I broke my rules and I just lost whatever X amount. So let me just trade another trade right now. Hopefully just get back even. So this as if this mistake never happened. And you take another trade that just you make it up and it makes no sense. You take the trade, you lose again, and then you oversize, you want to make it all back. You're like, I just want to be break even and I'll be good. And you keep on trading until the account blows. It's just these small mistakes. So that's why we always say, never let the numbers seep in or affect you. Number two is never skew from your system, because multiple things can result from it, and they all pour into blowing your account. You'll be like, oh, I shouldn't have taken this trade in the first place. Keep on trading until you make the money back, and then you probably won't, because you'll start taking dumbass trades and the account will go away. That by the way, that's what happened to you with your first crash out. You did take probably a stupid trade because you were just not in your right mindset, and then that trade was a loss and you kept on trading. But thankfully, because you kind of have this good foundation, you kind of stopped yourself early. But for most people, even for yourself later on, like there's going to be days where you're not fine. There's going to be days where I'm not fine, right? You always have to have the rules in place and in check. And then if you do break those rules, you have to have a hard limit to where you're done, right? Because all it takes is that small trigger, and then you'll seep back and down into that spiral effect of taking dumb trades and dumb trades and dumb trades until you blow the account, right? All it takes is just one day to take out weeks of progress. Trust me. Um, so yeah, man, like again, the whole point of this interview is just kind of the psychological part, how you were able, because the technical analysis part, we all know it. It's fine. We talked about in the last interview. It's simple and easy. Just apply it. As the hard part is applying it per rules and then following the rules. Because emotionally, as you said, you saw people that were taking trades and you were not taking trades. You saw people that were winning and you were not winning, and you let it seep in and you started taking dumb trades. It's just the psychological part. So if you can handle and control the psychological part, trading is just a very simple and boring game. Like it's just very repetitive. You shouldn't even have um, any adrenaline when you come and take a trade. Like I want to ask you, when you went into that kind of crash out stage when you got into Jota, and then also that final trade that you took that was outside system. I bet you 100% your heartbeat was just through the roof in both those scenarios. True?
So, to be honest, so far all of my trades were kind of high on hormones mostly, and that's because I'm new.
You mean every trade was like you were
Almost every
like
no, the
you
majority,
yeah.
the majority of my trades were.
What do you think the reason is?
It's because I'm new.
Makes sense.
It's because I'm new.
Makes sense. Okay, so all right. So you still have that kind of adrenaline rush in each single trade you took. How were you able to control yourself even though you had that rush?
So basically, what I physically do, I literally just put my hands underneath my thighs while I'm sitting down.
Okay.
Literally. I look at
Okay.
the chart. I sometimes vocally, sometimes mentally, I just repeat the sentence or I repeat the thought that, look, we put the ratios, we accepted the risk, let it play out, let it play out. If we lose, it's not the end of the day, it's not the end of the trading. And basically, that would go through my mind almost every single time I would take a trade, aside when I'm actually sometimes like stronger than how I usually come into trading. Because look, it's not about strength, it's not about how good of a mental you have. It's about the discipline that you have, and it's about how to stop yourself. You can have all the emotions, you can be as weak willed as you want, but it's about stopping yourself from taking that action, right? Like if there is a mechanical way to stop yourself from taking from over risking or over trading or these kind of things, uh, you would do it. But unfortunately, it's not easy and it's not accessible to everyone. This kind of mechanism, whether like where you can put an end to it without your interference. So basically, a third party
Not
with
every prop firm has that option.
exactly. And
Apex doesn't have it, right?
no, no.
Yeah.
So with Apex, actually, this is a fun fact. So if you on Tradeovate, if you put your own money, you would be
Yeah.
able to set max profit and max loss, and also lock it for 24 hours, like for the trading session. So that's like maybe 12 hours, something like that, right? But
Okay.
when you sign up through Apex to a Tradeovate account, they do let you put the maximum loss and maximum profit, but they don't put the option to lock it for the entire day after you hit
Yeah.
your max loss. So basically, they still want you to lose, obviously, and yeah, it's and they obviously do it for a purpose. They want you to overtrade. You got to keep
Of
that in your
course.
mind. Know that these companies are out to get you. Know that the market is out to get you. Know when to stop. Once you know when to stop, you do not need to stop trading, because if you do not know when to stop throughout your trades, you will eventually stop trading, because you then would have lost all of your money. You would have lost all of your
Yeah.
personal money. You would have lost like your money on funded accounts. It does not. You would have lost a lot of money. So the important thing is know when to stop. Back to the topic. What I would do is I would just put my hands underneath my thighs, accept what I've risked, and move my stop loss logically and according to the strategy and the model that we use.
You see, you just said a very important point is I've risked how do you say it? You said I've risked accordingly or I've risked the proper way. So you've risked the right amount. You weren't over risked. So that helps a lot because if you risk an amount that you're willing to lose without, let's say I'm willing to risk $200, and if I lost, it really won't affect my account to the point where it's going to blow up or it's going to blow. If you risk correctly, that as well lowers kind of the stress and makes it easier for you to hold the trade longer as well. So that's a very important factor is risking properly. You said it, risking properly. I risk properly. I have, a $250, $300 risk per trade or whatever per day. And since I'm risking within that range, I'm fine. But if you were over risk, let's say you risk double 600, you're definitely not going to be on ease. Even myself, I won't be on ease because I'm risking too much. If I lose, I can't afford to lose that much, right? So risking properly is definitely for sure um, a way or a thing that can help lower kind of that stress when you enter a trade and trust it more. But yeah, man, well said, well said. If you got one thing to end it, to kind of maybe a word you would give to someone who just got funded or someone who's just getting into this live account stage or wants to get to live account stage, what advice would you give them? What to avoid, what to do, mainly
Yeah,
psychologically, because the technical analysis part, everybody can learn it. It's simple, it's easy. But the psychological part, because that is trading. I think you can now agree with me. Like I used to tell you from the beginning, trading is psychology. It's not technical analysis. So I think now you can for sure agree with me. So psychologically, if you have an advice for anybody that's coming into live new, or maybe is in drawdown, maybe crashed out, maybe made a couple stupid mistakes last week, what is something that you would give them a word of advice?
I would say detach from the outcome. Never think of yourself as a lucky person. Never think of yourself as an unlucky person. Luck has nothing to do with it. It's probability. And probability is not the same as luck. If you associate both with, if you conflate each other, the two concepts, you will basically distract yourself and you will lose yourself in this process where you think this is only happening to you and not happening to someone else, when in reality it happens to all of us, this to the same degree. I would say that don't like I would also say that you should not be a gambler. Once you get emotions, even if you haven't taken a trade, and I haven't done that to be fair, but I would argue uh, that once you feel like you're in a rush, take a step back. You're not going to find a good trade. You're not. You're going to fog up your analysis or the level of the analysis that you have. So everything will look like an entry, and your entries would go unnoticed, like the good entries would go unnoticed. It's better off to come to the market disassociated from your outcome and not treat it as a game and never think of it as a luck game and whether you are lucky or you are unlucky. Never think of yourself when you're trading. Never think of yourself at all. Don't. I think this is important because once you start putting your emotions on the line, once you start saying that, oh, it's going up just because I entered. Once I entered, it's going up. Once you have that kind of, once you think of that, just get out, just cancel all orders and get out and take a walk because you're not, what you're doing is incorrect. You shouldn't be saying anything about you. You shouldn't be saying the word I. The only word, like the only I word that you should be saying is that I took a trade, I accepted the risk, let it play out. That's the only I you should say. That
Yes,
would
and
be,
then
yeah.
whatever mistake you make, it's on you as well. The market has nothing to do with it. The market does what it wants, and then you're trying to ride the trend, right? And if you're wrong, it's on you. It's not on the market as well. And to aid what you said about focus and kind of seeing a correct trade from a scientific point, I can't remember exactly what the drug is, but if it's either adrenaline or dopamine, once it's one of those two, I can't remember exactly, but once it's secreted, your clear thinking now is decreased. So whenever you're in a equilibrium state, you can think more clearly. But when you're in a heightened state, you stop thinking, or the ability to think in a clear mindset goes away. You start thinking in a fogged mindset. So whenever you have, for example, you notice your heartbeat is too high and you start to breathe too heavily, that is when you start to have foggy thinking, right? You can't think clearly. So whatever used to be a clear trait to you or was easy to spot now is hard to spot, and now you're going to start seeing wrong trades that are not there because you're not thinking properly. That's why when you come to trading, you have to be in an equilibrium state. You have to be relaxed. You have to be as calm as possible, right? When you start to get into that fight or flight situation, your brain does not think clearly. All it wants to do is defend. And in trading, the way you defend is by trying to get that money back in any way, shape, or form. Because you're not gonna in fight or flight, right? You don't fight the charts. The way your body responds, it thinks it just needs to go into survival mode. And the way it responds is, I need to get back what I lost in the markets. So you start taking trades that are not there. That's why when you start to feel that you're in that heightened situation and you've already lost a trade, for example, that's why I always say one full loss, call it a day. Because after that, believe it or not, accept it or not, it took me a long time to accept it, but you start thinking in a less logical way. Because now, even myself, when I take a loss, I'm not at equilibrium anymore. I'm more heightened. So now my thinking, my clear thinking is lower. That's why when I start to look at the charts, now I'm going to look at it at a less logical way. That's why you have to end it right then and there. Because if you start looking at the charts and you're not, let's say you look at the charts and you haven't slept, you're not fully awake. You know, you come late to the charts and you don't even know what's going on. You're not gonna think clearly. Same thing happens when you enter a trade, you lose. That equilibrium state now is a little bit heightened, right? Nobody likes to lose. So now the clarity is going to be less. Your ability to think clearly is going to be less. That's why end it right then and there. That's kind of to aid your what you said about
I
having clear mind when you come to trade,
yeah.
right? Look at something that is logical and try to find something that is so obvious and look at it when you have a clear mind. Be relaxed, equilibrium. That is when you think the clearest. Other than that, you don't want to be too low and barely awake, and you don't want to be too heightened. Because if you're too low and barely awake, you're not going to acknowledge the risk. You're not going to maybe even see clearly. And if you're too heightened, you're not even going to care about the risk. You just want to get back what you lost. So you have to be equilibrium. If you're not, don't trade. That's it. So yeah, man. I think that'll be it.
I have
A
one thing.
nice
I have
quick
one
one,
thing to
hopefully.
add real quick, before we
Yeah.
end. I just remembered a fun trade that I took that I lost, but the whole situation was funny. So, and in the end, it does send a message. What kind of advice I'm giving? So I was eating, right? I got a sandwich. I was eating while looking at the market. I took one
Yeah.
trade. I don't know why I took it. It made almost no sense. I lost like 150, I think, right?
Okay.
And I just skipped the day. And I was like looking back at it at that, like in the same day, even doing small, minute things, small, insignificant things while trading actually affects you a lot. Like
I swear to God, yes.
imagine one sandwich. I'm eating a sandwich while looking at the charts.
And then you
This,
come back and it's like, what did I do?
what did I do?
See? Because in the moment you weren't thinking clearly. Your mind was somewhere else. But when you're done and then later in the day you come back and like, I would never take this trade ever. But in the time you're like, oh, this is fun, let me take it. You see, that's the same point. For me, by the way, as well, there was not too long ago, I broke my rules and I traded in the third macro. I only trade two macros. I used to trade the third macro and I was stopped. The market was like, yeah, I was like, all right, for sure. It hasn't moved with the first two macros. Let me wait for the third macro and I'll trade the third macro. And I lost. And then when the day ended and I looked back at the trade, I was like, I would never take this trade ever. It's past my trading time. I looked back at the trade. It's not even A plus, but because in the moment I was so bored and I was like, I have to take a trade. I've been sitting for 2 hours. I have to take a trade. I have to pay myself. When you're not thinking clearly, you're eating a sandwich. I was bored. You take stupid trades, and then when you come back at it later in the day, you're like, oh man, I would never take this trade ever. And it happens all the time. Sorry, it happens all the time. You have to be in an equilibrium state, As soon as you start to feel too bored or too excited, that's a sign to stop. I promise you, that's a sign to stop. I even tell this to myself right now. Whenever I'm too heightened or too calm, way too calm, in other words, bored, right? I've been sitting too long, nothing has presented. If I'm on the two extremes, you have to end it there because you're going to start taking illogical trades that are stupid and they're going to cost you money. And then the whole point, like the big fear is not that single trade, is a spiral that could come after it. Because for me, when I would take a stupid trade, I'm like, man, I shouldn't have taken this. I'm pissed. Now I want to get that money back. And then you start taking stupid trades that don't make sense. And that spiral just, it gets bigger and bigger. And then you blow the account. Or at least you wipe out like a full week of results. That's why this is like kind of, or to give you the checklist, right? Or the rules. Have rules that you know of. That's in the first column, right? Let's say that day you are a dumbass and you broke them. Have a numbers rule of I don't want to lose more than X amount per day. So you have a kind of a technical analysis rule. Like for me, I don't trade past the 2 macros. And then let's say I broke that rule and then I took a trade on the 3rd macro. Now I have another rule of I can't lose more than, let's say, for example, $100 a day. Let's say I'm a dumbass and I still broke that rule. You have to have a 3rd hard limit stop. And for example, in Top Step, they have this rule, the option where you can set a max loss and then it locks you out automatically. That is beautiful. But for other, like Apex, for example, they don't have that. You have to have something that forces you to stop. Because if you don't force yourself to stop, you're going to keep on trading. And then before you know it, that account is blown or all your profits are gone within a matter of like 20 minutes,
I think
right?
I have a small solution for that last
Yeah.
issue. It's gonna sound simple and stupid, but it's actually not. It does work sometimes. Most of the times it does work. Just call someone. Call someone, whether it be it on the phone, whether call someone from your friends, family, whoever, your spouse. You just call someone and just be like, I mean, obviously, do brief them on what you're doing and how you're feeling, how you would feel before trading. And when
Yeah.
you reach that point, you're one help call away from having the chance to get out of this kind of downward spiral. So you just call. So basically, for me, let's take a practical example. If I would go through that, I would just yell to my wife, "Hey, come here, help me. I already took a loss. I don't want to stay here. Just help me." And that's okay. There is no shame in needing help.
Just disconnecting. That's the whole
Exactly.
point.
Exactly.
Just disconnecting from the
Yeah.
charts because if you're too focused and tunnel vision on the charts, you're gonna keep on trading, taking trades that are not there. And then you have to understand you don't have to trade every single day as well. Like people, even myself, will tell this to myself, you don't have to trade every single day. If there's a day where you don't find a setup, so be it. Just survive to the next day. You don't have to trade every single day because if you don't find a setup and then you force a setup and you take a trade and it's a super trade and you lose, you're gonna be like, oh, I shouldn't have taken that trade in the first place, and then you're gonna go into that spiral. So if you don't find a setup, no problem. There's always the next day. There's always the next week. And by the way, if you blew your account from stupid mistakes, look at it from a positive view. Look at it from a way of, okay, I'm learning, right? Journal it, write it down. Be like, okay, what did I do? What was I thinking in the spot at the time? Write it down in a separate journal, in a separate note where like psychological issues that you have and what you were thinking through that trade, even if you blew the account. Write it down, learn from it. Don't be like, oh, I blew the account, let me just buy another one. No, don't be a dumbass. Write down why you blew the account, what happened. I blew the account because I was thinking of that. There may be a setup if later in the day, if I stop trading, I'm going to miss it. Write it down. And then the next time when that thought pops in your mind, you'll be like, oh shit, I remember the last time I did this, I blew my account. So I'm not going to do this time. Even I have this. I have a journal for just emotions, psychology. That's it. And I still update it every single day because there's certain cues that happen. And if that cue, you remember what happened last time, for example, X cue happened and I wrote it down. So the next time when it happens, I'm going to remember that, oh, this happened last time and look at the result. I lost X more amount than I should, or I blew my account when I shouldn't. You know, Like for me, for example, the what I just told you, where I traded the third macro, what was the cue? I was just bored. So I wrote it down. I was bored. First two macros, I didn't find anything. I was bored, and so I took a trade in the third macro, and I broke my rules, and that resulted in a loss. Now, thankfully, I have this hard stop where it just locks me out automatically, so that saved me. But if I didn't have that, what would have happened? I would have went into that spiral, right? We all have that cue. You have to. You can't be a robot. You're human. There's no such thing as eliminating emotions. You can't do that. But there's things of eliminating the cues. I'm not going to eliminate the emotion. I'm going to eliminate what causes that emotion to evoke. I'm going to eliminate over trading. I'm going to eliminate trading past or breaking my rules. I'm going to eliminate over trading or over risking, because these cues are the things that result in that downward spiral of over trading, and then that emotions getting evoked. That's like when they say, when you're angry, just get up and leave the room, right? It's a cue. You want to eliminate it. That's the thing. But you're still human. You still get angry. So it's not eliminating the anger part. It's eliminating the cue itself. And that's what I figured with trading. That's what I've tried to teach you, is just eliminate the cue itself. Don't eliminate the emotion, because you're human. There's no way you're going to eliminate the emotion. There's no way. But eliminate the cue that evokes that emotion. You know? So yeah, I think that's going to be it. That's going to wrap it. I'm very proud of you, man.
Thanks a lot.
Inshallah alaik.
Thank you.
First payout in 6 months. Inshallah, very soon you quit your job. Now, don't think it's going to be uphill from here, because you still have to be A+ all the time. You have to be on your A game. There's going to be days where you're not on your A game and you lose money. It's just trading. It's an imperfect game. But as long as, in general, you're on your A game, and when you lose, in general, you lose less than what you win, on the long run, you're going to make money. There's going to be weeks where you don't make money. There's going to be weeks when you lose. There's going to be weeks when you win. On the long term, all your goal is those winning weeks to be more than the losing weeks. And when you have losing weeks, to not crash out and to be able to survive to the next week. That's the whole thing. Right? So don't think it's going to be uphill. There's no such thing as profitability. You have to be on your A game all the time. Like even myself, if I'm not on my A game, bro, my accounts are gone. Just like that, you have to be on your A game. You have to have rules, hard rules, and then just follow them as much as you can. That is trading. It's an imperfect game. There's no way you turn profitable and then that's it. You're profitable all the way. There's no way. You have to be on your A game all the time. So I do hope you all the success, and I hope that you scale up in the future, and then those payouts start to be much bigger, and then you eventually leave your job, and then you start to invest with the money that you made with trading, and then you'll live a much better life, inshallah.
Definitely, inshallah.
Thank you, man.
Of course.
And yeah, hope you guys found this insightful. Till next time, peace out.